Hello and welcome to Reg 1, where we'll talk about individual income tax. Taxes which individuals pay to Uncle Sam. Now, Uncle Sam, that's the expanded form of US. And we're going to start Reg 1 with Form 1040. So, Form 1040 is the form that all individual taxpayers need to file with the IRS or the Internal Revenue Service, a bureau of the US Treasury. Now, IRS's job is to collect internal revenue for the US federal government, or as we would refer to it as Uncle Sam. On page 4 of Reg 1, we're looking at highlight Form 1040. Now, this is the US highlight individual income tax return. Now, we've got put a box around filing status out here. So, if you look at the first filing status, it says happy and single. So guys, that's the single status. Now, if you're not single but married, you could be a married filing joint where it's one return, one tax return for the husband and the wife. Or if the husband and the wife don't want to come together for tax purposes, they do a married filing separate. So once again, if you're married, you've got two options. You could either do a married filing joint or a married filing separate. However, if you're single, the base status, of course, is single. But you could upgrade yourself to a head of household or a qualifying widow or widower. Now, we'll spend a lot of time on filing status in a little bit. But for now, let's move on our Form 1040. So on this form, then you see the name and initial of the individual, last name, the individual's social security number. If it's a joint return, that means the husband and the wife filing one return, then you also have the spouse's first name, the spouse's last name, and the spouse's social security number. You've got the home address, city, town, post office, state, all of that. And then you also have a section for put a box around dependents, where you have the first name, last name, the social security number, and the relationship of the dependent. We will talk about how dependents could qualify individual taxpayers for underline the child tax credit or underline credit for other dependents. So think about a husband and a wife, a married couple having two kids. So that's two dependents out here. Also having a dependent mother living in with them. That's another dependent. So for the two children, they could be eligible for the child tax credit. For the dependent mother, the couple could be eligible for the credit for other dependents. Next, you've got the signature section where the taxpayer must sign off. If it's a joint return, both the husband and the wife need to sign. And the last section of this page, right? If prepared by, and put a box around paid preparer. So if the individual or the couple gets a CPA or a tax preparer to prepare the tax return, that's where the CPA or the tax preparer signs. Or if you the CPA, you the tax preparer, preparing somebody else's tax return, this is where you sign. So this is the section for paid preparers. To start with, on your form 1040, Uncle Sam wants to know all that you've earned during the year, your total income, or as we would call it, your gross income. So gross income is all the money that you've earned during the year. Let's say your salary, your business income, money that you've been working really hard for. Or did you smartly invest your money in bonds and stocks? So from bonds, you get interest income. From stocks, you're now getting dividend income. Or do you own real estate that got you passive income like rent? Or did you just sell your $100,000 house for $1 million? That's capital gains for you. Even if you went to Vegas and with your mathematical genius, you've made $500,000 in gambling winnings. All that's gross income on your 1040. Finally, after a lifetime of hard work, you're now retired and you're getting pensions from your ex-employer. You're getting social security benefits from Uncle Sam. You're getting distributions from your individual retirement accounts or your IRAs. All of that, guys, is gross income on 1040. To help you put all of this together as gross income on 1040, Uncle Sam has created a bunch of schedules. So I'm going to be introducing you to, let's say, Schedule B, which is going to be your schedule for interest income, for dividend income. I'm going to introduce you to Schedule C, which is going to be your schedule for profit or loss from business, sole proprietorships that you own. You're going to have Schedule D, which is for capital gains. You're going to have Schedule E for supplemental income, which includes income from rental real estate, income from royalties, income from flow-through entities like partnerships, S-corps, estates, trusts. And then we'll also look at Schedule F, where the F is for farm income. So guys, we're going to look at a bunch of schedules out here. So we'll talk about Schedules B. So once again, B is interest and dividend income. Schedule C, which is business income, sole proprietorships. Schedule D for capital gains. Schedule E, supplemental income like rental income, royalties, flow through entities. Schedule F for farm income. But that's not all. You're going to have a bunch of line items on your 1040 for other sources of gross income. And to help you put all of that together, all the other line items, so that's besides the schedules B, C, D, E, F, to help you put all of that together, I'll give you a mnemonic. Think of it like Uncle Sam coming to you. So you're the individual taxpayer. Uncle Sam comes to you and very respectfully tells you, "Sir, you owe." Once again, you've made a lot of money, a lot of income during the year, and now you owe individual income tax to Uncle Sam. So Uncle Sam tells you, "Sir, you owe." And that's going to be your mnemonic to put together all your sources of gross income. So guys, once again, your gross income on your form 1040 is going to be a bunch of all these schedules B, C, D, E, F and those individual line items which we're going to put together using the mnemonic "Sir, you owe." On page 5 of Reg 1, we've got the second page of our Form 1040. And as you get here, I want you to draw a bracket from lines 1 through line 6. And right there, gross income equals schedules plus Sir U O. So we've got all the gross income components out here. Look at line number 1. It says wages, salaries, tips, etc. Attach, highlight forms W2. So every salaried individual gets a form W2 from each of his employers. So if an individual has worked only for one employer during the year, he's going to get only one form W2. But let's say if an individual has been on 3 jobs, 3 employers during the year, the individual's going to be getting 3 form W2. All of that to be included on line number 1 out here. Lines 2 and 3 are for interest and dividend income. Look at line 2B. It says taxable interest. 3B is ordinary dividends. So draw a bracket around these two and write there Schedule B. So if an individual or a married couple filing jointly has many sources of taxable interest and ordinary dividends, the taxpayer can fill out a Schedule B. Now, if you look at 2A, that's tax exempt interest. It's not taxable, but still to be disclosed on Form 1040. 3A is qualified dividends. So these are dividends that meet certain holding period requirements and are taxed at a lower tax rate vis-a-vis ordinary dividends. So we'll talk about all of this. Interest and dividends. You got IRAs, pensions and annuities on line 4, social security benefits on line 5. Look at line number 6. Highlight total income. It says add lines 1 through 5 and add any amount from, put a box around Schedule 1, line 22. Flip to page 7 where we've got, put a box around Schedule 1 to Form 1040. And on the first section of this Schedule 1, we have highlight additional income. So we've got all the additional income items from lines 1 through line 21. And line 22 says, combine the amounts in the far right column. And this is the total that you enter here and include on highlight Form 1040 line 6. That was a line where we had total income or gross income. Now, we've already spoken about Schedule B, which has got interest income and income from ordinary dividends. Look at line number 12 here. It says business income or loss. Attach, put a box around Schedule C. Line number 13. Capital gain or loss. Attach, put a box around Schedule D. Then look at line number 17. Rental real estate, royalties, partnerships, S corporations, trusts, etc. Attach, put a box around Schedule E. So Schedule E, that's for supplemental income. Line number 18, you've got F for farm income. Put a box around Schedule F. So as I said, gross income is a bunch of schedules. We've seen Schedule B, C, D, E, F, and a few line items which we recap using a mnemonic Sir You Owe. So that's what Uncle Sam tells you. Sir, you owe. You've earned so much, now you better pay taxes. Back on page 5, let's look at a mnemonic Sir, you owe. So on line number 5, where you've got social security benefits, write S. Line number 4, where you've got IRAs, pensions, and annuities, write I. So that's the S and I of Sir You Owe. Flip again to page 7 and look at the additional income section of Schedule 1. Line number 10 is about taxable refunds, credits, or offsets of state and local income taxes. So that is right, the R for refunds. So that makes it SIR for us. Line number 19, unemployment compensation, right? U. Sir, you, and the O of O is there on line 21. Other income, right there, O. Back again to page 5 on line number 1, where we've got wages, salaries, tips, etc. Right, W. So that's the W of O. And as we've already noted out here, so gross income is a bunch of schedules, schedules B, C, D, E, F, and our mnemonic Sir You Owe. The E of O is the earnings from foreign sources. And as I've already told you, your Form 1040 is worldwide income. So all earnings from foreign sources for US citizens, US residents is included out here on Form 1040. So when you're actually filling up your Form 1040 and have all your gross income in place, you're surprised that you've earned so much money. Because now you see nothing. It's all gone. You've spent it all. You've been setting aside money for your individual retirement accounts. You've been paying your student loan. You've been putting money into your health savings account. And now you wish that there's a way to reduce your gross income. You wish there could be some deductions. Uncle Sam's hearing you, and being as kind-hearted as he is, he grants your wishes. So guys, as you could guess, that's going to be your mnemonic for certain adjustments or deductions that we're going to have from gross income. So let's put it up there. So we have gross income less adjustments. So these are some deductions which help you get to your AGI or your adjusted gross income. So guys, gross income less adjustments. So that's the adjusted gross income. And as I said, for these deductions, for these adjustments, your mnemonic is wishes. So these are the wishes that Uncle Sam grants to all individual taxpayers. Back on page 5, on line number 7, highlight adjusted gross income. So line 6 was total income or gross income. Line 7 is adjusted gross income, or as we call it, draw an arrow and write AGI. Now, if you read line 7, it says if you have no adjustments to income, enter the amount from line 6. So basically, if adjustments equals 0, then your gross income or total income is your AGI. But otherwise, subtract, put a box around schedule 1, line 36 from line 6. So schedule 1, line 36 is the total amount of adjustments that you subtract from line 6, which is the line for total income or gross income. Flip to page 7, where we've got schedule 1 to form 1040. And the second section of this schedule is highlight adjustments to income. Look at line number 36, which says add lines 23 through 35. And this total on line 36 is subtracted from total income to get to AGI. And as I've already told you, adjustments to income are like wishes granted to taxpayers by Uncle Sam. Line number 30, write W, because that's the W of wishes, which is an adjustment allowed for penalty on early withdrawal of savings. So W for withdrawal. The I of wishes is what we see on line number 32, IRA deduction. Write an I there. Draw a bracket from line 27 through line 29 and write S, because this S of wishes stands for self-employment deductions. So line number 27 is the deductible part of self-employment tax. Line 28 is self-employed SEP, simple and qualified plans. Line number 29 is self-employed health insurance deduction. Basically, all these three lines are for self-employed folks. And that is our first S of wishes. The H of wishes is on line number 25, health savings account deduction. Right there, H. E of wishes is there on line 23, educator expenses. Write an E out there. And the second S of wishes is there on line 33, the student loan interest deduction. Write S out there. So guys, as I told you, adjustments to income are wishes granted to taxpayers by Uncle Sam. The sum total of adjustments is on line number 36 on this page, which gets subtracted from total income or gross income to get to AGI or adjusted gross income. Now that you've arrived at your AGI or your adjusted gross income, you still feel it's a lot of money you've got to pay taxes on, and you want more deductions. Uncle Sam's listening. He hears you again and now grants you a bunch of deductions from AGI. So we've seen a bunch of deductions to AGI. We call them adjustments or above the line deductions. Now we'll talk about deductions that we have below this line, below the line deductions or deductions from AGI. So from AGI, all individual taxpayers could take a standard deduction. So the standard deduction is a fixed dollar deduction. So this is about $12,000 per individual for the year 2018. Or alternatively, individuals could claim a bunch of itemized deductions. So that's a list of items that could be deducted from AGI. So the option is either the fixed dollar standard deduction or itemized deductions. For itemized deductions, individuals, they need to file a Schedule A. So this one's Schedule A, which is a list of items of deductions. So on Schedule A, individuals are allowed deductions for medical and dental expenses they've paid. They are allowed deduction for taxes paid to state and local governments. Allowed deductions for interest paid on home mortgage loans or investment interest expense. You're going to be allowed gifts that you've made to charity. There's deductions allowed if there's been a cyclone and you've suffered casualty losses. Or let's say you've earned $500,000 on your January trip to Vegas, but then you lost it all when you traveled again to Vegas in Feb. So that's going to be your gambling losses. Again, all of this allowed as deductions on Schedule A. So as you realize, it's quite a lot of items. And to make life easy for you, I'm again going to give you another mnemonic. This mnemonic is dedicated to one of the guys in the Miles University Relations team. His name is Michael Wagner. We call him Mike. Now, Mike's a happy-go-lucky guy who does a lot of charity and who does a lot of fun, has a lot of casual outings. And our mnemonic for Schedule A, itemized deductions, is Mike takes interest in charity and casual outings. So if you realize, we're talking about 6 items here. Mike takes interest in charity and casual outings. So that's all the deductions on Schedule A. So once again, individuals are allowed an option for below the line deductions. Either they go for a fixed dollar standard deduction, so this one's a fixed dollar, or they go in for itemized deductions by filing a Schedule A. Now, a trick question to all of you out here, if you're given such an option of standard or itemized, which one will you take? Naturally, you guys are all smart. You will take whichever is higher.
Back on page 5, where we've got the second page of a form 1040. Look at line number 8. Highlight standard deduction. Circle or and highlight itemized deductions. So the taxpayers have an option of either taking a fixed dollar standard deduction or doing itemized deductions. For standard deduction, look at the bubble which grows out on the left. So we've got standard deduction for single or married filing separately, and for 2018 that number is highlight $12,000. If it's married filing joint, that's like 2 people, so $24,000. For head of household, it's higher than single, it's $18,000. For qualifying widowers, that's $24,000, as if the spouse of the widower is still alive. So once again, the individual taxpayer either uses a standard deduction or itemizes deduction. Now, if the taxpayer chooses to itemize deductions, that's when the taxpayer fills out, put a box around Schedule A. To take a sneak peek into Schedule A, turn many pages forward till you get to page number 63. And once you get there, put a box around Schedule A to form 1040. And this is the schedule for itemized deductions. And let's look at those items of deductions that you're allowed on the schedule. The first one is medical and dental expenses. Highlight medical. The next deduction is for highlight taxes paid by the taxpayer. So this is for state and local taxes, other taxes. Next is highlight interest paid by the taxpayer. So this is interest on home mortgage loan of the taxpayer. This is investment interest expense. Next, scroll down. Highlight charity. So this is the deduction for charitable contributions by the taxpayer. Highlight casualty and theft losses. So this is deduction for casualty and theft losses incurred by the taxpayer. And the last one is highlight other itemized deductions. So we've seen 6 items here, and I've already given you a mnemonic for all these items for itemized deductions on Schedule A. And we all know that Mike takes interest in charity and casual outings. So where you have medical and dental expenses, write Mike. Where you have taxes, write takes. Where you have interest, write interest. For gifts to charity, write charity. Casualty and theft losses, write casual. And other itemized deductions, write outings. So this is how we summarize the 6 items of itemized deductions. Using the mnemonic, Mike takes interest in charity and casual outings. Let's look at line number 17, which says add the amounts in the far right column for lines 4 through 16. Also enter this amount on, put a box around form 1040 line 8. So we know that on form 1040 line 8, the taxpayer has an option of either taking a fixed dollar standard deduction or using itemized deductions. If the taxpayer goes in for itemized deductions, the taxpayer needs to fill out this Schedule A, which we summarize using our mnemonic: Mike takes interest in charity and casual outings.
We continue to look at deductions that you have on your form 1040. So we started with adjustments, which are deductions to AGI, or we call them above the line deductions. And then we spoke about standard or itemized deductions, which were deductions from AGI or below the line deductions. And now we'll talk about QBI deduction, or qualified business income deduction. So that's another below the line deduction or deduction from AGI, which applies, which is about 20% of any qualified business income which is included on gross income. So qualified business income could be business income that you have from your sole proprietorship, or it could be income that you have by virtue of being a partner in a partnership or a shareholder in a S corporation. So we'll talk about all of that. But for now, what we have here is qualified business income or QBI deduction as a below the line deduction. So we have AGI less standard or itemized deductions less qualified business income deduction, which gets you to your taxable income. So guys, we started from gross income, and with all these deductions, we are now at taxable income.
Back on page 5, we're still going through form 1040, where line 6 was total income or gross income. Line 7 was AGI or adjusted gross income. Line 8 was standard deduction or itemized deductions. Line number 9 is highlight qualified business income deduction. Now, when we subtract lines 8 and 9 from line 7, we get line number 10, which is highlight taxable income.
On your 1040, we are now at taxable income. Income that you now need to pay taxes on based on your tax slabs. So taxable income multiplied by the tax rate gives you the amount of federal income tax. Now, what we often see is there's some wealthy taxpayers who go for very smart tax avoidance strategies to reduce their taxes. Let's say they do a lot of tax exempt income which is not included on their gross income. They very smartly take a lot of deductions such that the taxable income gets reduced and the taxes are way less compared to the money that they're making. Now, if these guys, these wealthy taxpayers, they think they're smart, Uncle Sam's smarter. He has a parallel tax system which we call the alternative minimum tax system. In such a way that if those wealthy taxpayers try to avoid taxes on the regular return, Uncle Sam brings them back into the tax net by using AMT, or the alternative minimum tax. So much so that with the AMT, those wealthy taxpayers, they actually feel stripped of their money. So that's going to be your mnemonic for AMT. Very quickly, I'll give you an example of how it works. Let's say we're looking at a wealthy taxpayer who's got a tax liability of, let's say, $500,000, like $500,000. So this $500,000 is calculated on the regular tax return. Now let's say there's a parallel return being prepared, the AMT system, the parallel system, where the tax liability is only $400,000. Regular return 500, parallel is 400. What does he pay? The higher of the two. He pays $500,000 regular taxes, AMT is 0. However, if the regular tax return has $500,000 here, and let's say the AMT has $600,000, in that case, the taxpayer would actually pay again the higher of the two, which is $600,000. Where out of the 600, 500 would be the regular taxes. The extra $100,000 would be alternative minimum tax.
On page 5, we have highlight taxes on line 11A. And then on line 11B, we have write AMT, which is alternative minimum tax. And we'll find that on put a box around schedule 2. Turn to page 8, where we have put a box around schedule 2 to form 1040. Schedule 2 is for highlight tax. And on line 45, we have highlight alternative minimum tax, for which the taxpayer also needs to fill out, put a box around form 6251.
So far on your 1040, we've looked at deductions which help you reduce your taxable income, which of course leads to a reduction of your taxes. So let's say if your effective tax slab is 35% and you have a $1,000 deduction, that would help you save 35% taxes, which is like $350 in taxes. But now we'll talk about tax credits. So we're looking at tax credits which help you reduce your taxes dollar for dollar in such a way that if you have a $1,000 tax credit, it would reduce your tax bill by the entire $1,000. So guys, note, deductions above the line, below the line, they help you reduce your taxable income, which in turn helps you reduce your taxes. So as I said, a $1,000 deduction at a 35% tax slab rate would help you save $350 in taxes. But again, if you have a $1,000 tax credit, it would reduce your taxes by the full $1,000, a dollar for dollar reduction. Now, these tax credits, they could be non-refundable or they could be refundable. Let's talk about it. Let's say your tax liability on your 1040 is only $800. and your tax credit is $1,000. So 800 minus 1000. I know you would be coming up with some negative number, but Uncle Sam would be like, okay buddy, we are done for this year. It's zero taxes. I'll see you again next year. That's non-refundable tax credit. However, if you have a refundable tax credit, let's use the same numbers. So let's say the tax liability is $800 and your refundable tax credit is $1,000. In that case, Uncle Sam would actually send you a check back of $200. So you're going to file Form 1040, and instead of paying taxes, you actually receive a check of $200 from Uncle Sam. So guys, as I said, non-refundable tax credits, they could not lead to a refund. But if it's a refundable tax credit, you may even get a refund back from Uncle Sam. Now, we're going to put all these non-refundable, refundable tax credits, all of them together. And I'm going to summarize all of them using our mnemonic. So it's going to be another mnemonic. So we've done mnemonics for gross income, sir you owe, for adjustments, wishes, for itemized deductions. We spoke about Mike, who takes interest in charity and casual outings. When we did AMT, I told you the wealthy taxpayers, they feel stripped of their money. In tax credits, your mnemonic is ASDers. So you're going to be ASDers who are going to be foreign business winner. But we won't stop here. We'll move on. So we've looked at tax plus alternative minimum tax, less tax credits. Then you're going to add back any other taxes that you have besides the income tax. And a good example here is going to be self-employment tax. So let me write that here. So we have self-employment tax. And as the name suggests, this would apply if you're running your own business. So let's say when you run your business, you don't pay payroll taxes because you don't get salaries or wages. So now you have to pay the self-employment tax on your self-employment income that we have on Schedule C. And this self-employment tax is paid in addition to the regular income tax. Now we also have deductions or subtraction for any payments made. So these could be prepayments, tax prepayments that you've made, or these could be taxes which has been withheld by your employer or your client. So let's say your employer or your client, while making salary payments or other payments to you, have actually withheld taxes and have remitted them to the IRS on your behalf. That's a withheld tax payment. And after all these pluses and minuses, we finally get to the amount of taxes that you owe to Uncle Sam. Amount that you owe when you're filing your Form 1040.
We're back again on page 5. On line number 11, we calculated taxes. Line number 12, we've got credits. On line child tax credit or credit for other dependents. Now, these are the credits we've seen on the first page of Form 1040. That means on Reg 1, page 4. And besides these credits for dependents, dependent children, dependent adults, we also have certain more credits on put a box around Schedule 3. And then moving on to line 13, it says subtract line 12 from line 11. So these tax credits help reduce the tax liability dollar for dollar. But note, line number 13 also says if 0 or less, enter 0. This means that the credits that we have on line 12 are right non-refundable tax credits. Okay, now moving on. Line number 14 is highlight other taxes and put a box around schedule 4, which gets us to line 15. Highlight total tax, also circle it. It says add lines 13 and 14. Moving on to line 16, highlight federal income tax withheld. And this is from highlight forms W2 and 1099. Now from W2, draw an arrow and write the employee, because form W2s are issued by employers to employees. Whereas form 1099, draw an arrow and write independent contractor. So form 1099 are issued by businesses to independent contractors. So you have individuals who are employees, they're going to be getting form W2 from their employers. Individuals who are independent contractors get form 1099. And all their federal income tax withheld is here on line 16. Line number 17 is highlight refundable credits and put a box around schedule 5. Line 18 says add lines 16 and 17. These are your highlight total payments and circle that. So guys, look at this. Refundable credits, line number 17, are included as payments on line 18. So make a note there on line 17, right there. Refundable tax credits, treat like payments. Because if the refundable tax credits are in excess of the tax liability, Uncle Sam sends back a refund check. Now, we're going to compare line number 15 versus line 18. Line 15 is total tax. Line 18 is total payments. Now, if the total payments are in excess of total tax, that calls for highlight refund. Right? Or if total tax on line 15 is more than total payments on line 18, that is highlight amount you owe. Turn on to page 8, where we also have put a box around schedule 3 to form 1040. And this schedule includes highlight non-refundable credits. One of the important ones, look at line 48, highlight foreign tax credit. turn to page 9. And on the top, we've got put a box around Schedule 4 to form 1040. And this schedule is about highlight other taxes. And one of the other taxes we're going to spend a lot of time on is highlight self-employment tax, which is computed on put a box around Schedule SE. Moving down on this page, we've got put a box around Schedule 5 to form 1040, which includes highlight other payments and highlight refundable credits. And as I've already told you, refundable credits treat like payments. On this page, you also have put a box around Schedule 6. And that's to disclose any foreign address and third-party designees for the taxpayer. Now flip back to page 3, where we've got an overview of Form 1040. So as we know, Form 1040 starts with the top line, the gross income, which includes Schedules B, C, D, E, F, and our mnemonic right there, plus Sir You Owe. So it's like Uncle Sam telling the taxpayers, Sir You Owe. And then the taxpayers having wishes, which are adjustments to gross income, which leads us to adjusted gross income or AGI. From AGI, individuals can take a fixed dollar standard deduction or do itemized deductions on Schedule A. And our mnemonic for itemized deductions is Mike takes interest in charity and casual outings. Then there's also qualified business income deduction, which is allowed on qualified business income before we get to taxable income. Now, we've got adjustments to AGI. Draw an arrow and write above the line deductions or deductions to AGI. And draw a bracket from standard or itemized deductions through qualified business income deduction. And right there, below the line deductions or deductions from AGI. Now, taxable income multiplied by the tax rate gets us to federal income tax. And then we check for any AMT or alternative minimum tax. And our mnemonic for AMT is stripped. So with the AMT, wealthy taxpayers feel stripped of their money. Next, we have a dollar for dollar reduction of taxes via tax credits. Now, tax credits may be non-refundable or even refundable. And our mnemonic to put all the tax credits together is write ASDRs equals foreign business winner. Next, we add other taxes like the self-employment tax for self-employed individuals. Subtract any payments made to get to taxes due at the end of the year. So guys, this is an overview of Form 1040 which individuals need to file with the IRS.